Hello viewers, welcome to my channel. I'm Hashim Ali Khan. So now I'm going to start the problems, that is short questions and MCQs on other receivables and other payables. Two videos I have explained you in detail regarding what are other receivables and what are other payables and how these will be adjusted in the financial statements. So before start watching this video, I expect my viewers to have a complete grasp of the theory of these other receivables and other payables. Watch the first two videos, then only you come to this video. You can be able to understand properly. And before starting watching this video, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep ready a hard copy of all the problems which I have given. Then only you can understand the solutions. So take a screenshot of all the solutions of 8 short questions and MCQs, then I'll explain each one. Come on, now I'm going to start the very first question. See the first question carefully. A business financial year ends on 30th September. That means the accounts are closed every year on 30th September. On 1st July 2016, $200 was paid for insurance for 6 months to 31st December. The business has paid insurance premium for 6 months. The period of 6 months will be from 1st July and ends on 31st December. For this 6 months, insurance paid is $200. Accounts are closed on 30th September. On 30th September, accounts are closed. What is the correct entry in the statement of financial position on 30th September 2016? We are closing the accounts on 30th September 2016. So how much amount of insurance should be taken in statement of financial position? Statement of financial position. That means prepaid insurance. Because we are closing the accounts on 30th September and insurance amount will go up to 31st December. The insurance paid of $200 will go up to 31st December and we are closing the accounts on 30th September only. So how many months are ahead? 3 months. After 30th September, October, November, December. These 3 months are falling in the next year. So 6 month insurance is 200. 3 month insurance is 100. 3 month insurance is 100. So $100 insurance is paid in advance on 30th September 2016. And this $100 should be taken as other receivables because it is paid in advance. Last theory video I have explained you in detail. So $100 is other receivables. It is other receivable. So options given are A. Other payables $100, B. Other receivables $100, C. Other payables $200 and other receivable $200. So first of all, half of 200 is $100. So now tell me whether expenses paid in advance, is it an asset or liability? It is an asset. It is other receivable. It is other receivable. Insurance paid in advance is a current asset. Other receivable. So how many dollars? $100. $200 are paid for 6 months. $200 are paid for 6 months. But 3 months are falling in the next year. Here the solution. Amount paid for 6 months from 1st July 2016 to 31st December 2016 is $200. Accounts are closed on 30th September 2016. Therefore, number of months falling in the next year, that is October, November, December, 3 months. The expenses carried forward to the next year is $200 into 3 by 6 because total $200 are paid for 6 months. For 6 months, but we require for 3 months. So half of 200 is $100. So $100 should be taken in the statement of financial position as other receivables. The answer is B. Other receivables of $100. That's it. First question I have explained. Now come to the second. The following information is extracted from the rent account. Rent is an expense here. Rent account for a business. Reals. Owing at 1st Jan 2016. Owing means outstanding, payable. The rent payable at the beginning of the year is 400 real. And rent paid in the year ending 31st December 2016, 1700. Rent paid. And rent paid in advance at 31st December 2016, end of the year, $250. How much rent was payable for the year ended 31st December 2016? Ultimately, it is asking you how much rent expense to be taken in income statement. How much is the rent paid? Rent paid for the year is 1700 real. Rent paid. And outstanding rent at the beginning of the year was 400 real. That means the outstanding rent at the beginning of the year might have been paid during the year. It is not current year expenditure. According to accrual concept, only current year rent should be taken, not the rent of the last year. So last year owing was 400 real. So deduct 400 real from 1700 real. During the year we have paid 1700 real. And 400 are owing at the beginning of the month, beginning of the year. So 400 should be deducted. Similarly, rent paid in advance at 31st December 2016 is $250. That means at the end of the current year, rent paid in advance for the next year, $250. This also not related to current year. So deduct. The total rent paid 1700 real, out of which 400 real not of the current year, last year. Deduct 400. Similarly, 250 real is the rent for the next year paid in advance during the current year. This is also deduct. So 1700 minus 400 minus 250. That is the rent charged to income statement as an expense. So how much rent was payable for the year ended 31st December 2016? Answer is A. Real 1050. A is the answer. Real 1050. How? Now I am explaining. This is the problem. Just now I have read. Answer is A. Real 1050. How do we get this 1050? Rent paid during the year ended 31st December 1700 real. And minus rent owing on 1st January 2016 beginning, opening. And this rent owing 1st January means last year rent outstanding. So deduct that one, 400. And rent paid in advance at the end of the year 31st December 2016, closing. Rent paid in advance for the next year. That will be deducted, 250. So ultimately 1050 is the rent to be charged as expense to the income statement for the year ended 31st December 2016. So this is the 1050. That's it. Now next, problem number 3. Business rates paid in advance are treated as other receivable for the following accounting period. Business rates paid in advance. So any expenses paid in advance, that will be treated as other receivables. Other receivables in the financial statement. Which accounting principle is being followed? Last video I have explained you in detail regarding which accounting principle is followed for other receivable and other payable. Remember, it is accrual concept. We follow accrual concept and then only we adjust all accrual and prepayment. Other receivables and other payable. Here options are given: A. Consistency, B. Accrual, C. Money measurement, 4. D. Realization. The answer is B. Accrual. So business rates paid in advance are treated as other receivable. Which accounting principle? Consistency, accrual, money measurement, or realization? Our answer is accrual, B. So I am putting a tick on B. Next, fourth question. A trader owes the following amounts for electricity. Owes means outstanding, payable. Beginning of the year, 1st January, Hong Kong dollars 2000. 31st December, Hong Kong dollar 2500. The beginning of the year 2000, end of the year 2500. These are the outstanding electricity bill. The charge for electricity shown in the income statement for the year ended 31st December was Hong Kong dollar 15,500. So 15,500 is the electricity charges taken as expense in income statement for the year ended 31st December. What was the amount paid for stationery during the year? How much is the amount paid for stationery during the year? Answers are given. A, Hong Kong dollar 15,000. Second, B, Hong Kong dollar 15,500. C, Hong Kong dollar 16,000. D, Hong Kong dollar 20,000. The answer is A, Hong Kong dollar 15,000. How do we get that 15,000? Now I am going to explain it. So here is the question. Now answer is A, Hong Kong dollar 15,000. How? How much is the electricity charged to income statement? That is given in the problem as electricity charges shown in the income statement for the year ended is 15,500. That is given in the problem. Now electricity owing at the beginning of the year. Owing means outstanding. The beginning of the year electricity owing means during the year it is paid, no? During the current year, whatever is outstanding for the last year, that is paid during the current year. That is paid during the current year. So we add up. So add electricity charges. Electricity charges owing at the beginning of the year 2000. 2000 added. Similarly, electricity charges owing at the end of the year. At the end of the year, it is not paid. It is not paid. So, end of the year will be deducted. Electricity charges owing at the end of the year 31st December 2005. So, end of the year, we are deducting because we want to find out how much is the electricity charges paid. How much is the electricity charges paid during the year. So, the amount which is not paid will be deducted. The amount which is outstanding for the last year paid during the current year will be added. So 2,500 will be deducted. 15,500 minus 2,500, 13,000. To 13,000 we add up last year's outstanding 2,000 paid during the current year. So total 50,000 is the electricity charges paid during the current year ended 31st December. That's it. Now fifth problem. Problem number 5. In the income statement, Zai incorrectly included insurance paid in advance of RMB 3,500 as insurance outstanding. How will this affect Zai's profit for the year? See here, 3,500 is the insurance paid in advance. So actually insurance paid in advance will be deducted from insurance paid. This 3,500 RMB should be deducted from insurance paid. That is a correct treatment. But the accountant has committed a mistake. The mistake is, instead of treating it as insurance paid in advance, it is taken as insurance outstanding. The outstanding will be added. The two mistakes the accountant has done. The first mistake, he should have deducted insurance paid in advance. 3,500 he should deduct from insurance. But by mistake, he has added 3,500 as outstanding insurance. So two mistakes. Once, it should have been deducted, but it is not deducted. Secondly, by wrongly it is added 3,500. When it is added, the insurance amount will increase. When insurance amount is increased, expenses have increased. When expenses increases, the profit will be understated. the profit will be understated. The ultimate effect of this error is double the amount. 3,500 which should have been deducted from insurance, not deducted. By mistake, 3,500 is added to insurance as outstanding. So double effect. 3,500 plus 3,500, 7,000 RMB. This is the amount by which the profit will be understated. The profit will be understated by 7,000 RMB. Now the answer solution for this is like this. In his income statement, Zai incorrectly included. Answer is D, understated by RMB 7,000. Just focus on the solution. The problem is there in the sheet. Now, understated by RMB 7,000. How 7,000? The correct treatment is insurance paid in advance RMB 3,500 should have been deducted from insurance paid. The correct treatment, 3,500 insurance paid in advance should be deducted from insurance. That is the correct treatment. But instead of deducting, it is wrongly taken as insurance owing and added to insurance paid. So the insurance has been increased by 3,500. Instead of deducting from insurance paid, it has added to insurance. When it is added to insurance, the insurance will increase. The expenses will increase. When expenses increases, the profit will get decreased, understated. It will have double effect on profit. RMB 3,500 should have been deducted but wrongly added. So the profit will be understated by double the amount. 3,500 plus 3,500 RMB 7,000. The correct answer is the effect on profit is the profit will be understated by RMB 7,000. That's it. This is the end of problem number 5. Now problem number 6. See the sixth problem. A business made no adjustment for insurance paid in advance. Then at the end of the financial year, what is the effect of this? Insurance paid in advance should be deducted from insurance. When insurance is deducted, the expenses should decrease. When expenses decreases, the profit will increase. That is a correct effect. But unfortunately, the accountant has not adjusted insurance paid in advance. When insurance paid in advance is not adjusted, not deducted, the insurance will be more. When insurance is more, the profit will be understated. So finally, the effect is profit will be understated if no adjustment is made for insurance paid in advance. A business made no adjustment for insurance paid in advance at the end of the financial year. What is the effect? The profit for the year will be understated. So D answer is correct. The answer D. Profit for the year is understated. That's all. Now, seventh problem. Why should all expenses owing be shown in a business financial statements? Why should all expenses owing means outstanding, the expenses which are not paid but related to the current year, the owing expenses we are showing in the financial statements. Why? The reasons are given A, B, C, D. So the correct A answer is, so the correct total of current assets is shown in the statement of financial position. B, so the income of a period is matched with the cost of that period. C, to show how much customers owe the business. D, to show the amount owed to trade suppliers. The answer is B. The answer B is, so the income of the period is matched with the costs of the period. In the last video, theory video, I have explained. According to accrual concept, all the revenue and cost should be matched. Should be matched means we should take all revenues and all costs or expenses of the current period. Then only we can get the correct profit. Otherwise, if we do not adjust the revenue and expenses, then definitely the profit will not be correct. So these expenses owing will be shown in the financial statements to follow the accrual concept of matching the income with the cost of the period. So answer is B. So the income of a period is matched against the cost of that period. B answer is correct. Next, 8th problem. Susan receives a check from a tenant on 10th December 2016. Susan, she has let out the property to the tenant. She is the owner. Susan is the owner. She has let out the property to a tenant. And from tenant, Susan received the rent on 10th December 2016. This rent due to the business for a period from 1st January to 31st March 2017. 17 means next year. Current year is 2016. Susan is closing the accounts on 31st December 2016. Now, on 10th December 2016, Susan received rent for a period from 1st January 2017 to 31st March 2017, next year. It is called income received in advance. The Susan owner has received the rent in advance. How is this treated in Susan's financial statements for the year ended 31st December? When Susan prepares the financial statements, how this rent received in advance will be taken in the financial statements of Susan? Answer, expenses owing. First of all, it is not expenses. It is the income. Second, income owing. Income receivable. Owing means receivable. Is it income receivable? No. It is income received in advance. Susan has received the rent on 10th December 2016. For which period? From 1st January 2017 to 31st March 2017. So it is the income received in advance. Expenses paid in advance. No, sorry. C is also not correct. Income paid in advance. Yes, absolutely. It is the income which is paid in advance by the tenant. Susan's tenant has paid the income to Susan in advance. The answer is D. Income paid in advance. Susan receives a check from a tenant on 10th December. This rent is due to the business for a period 1st Jan to 31st March. How is this treated in Susan's financial statement? Answer is D. Income paid in advance. It will be shown as income received in advance under other receivables, under current assets. When Susan prepares the statement of financial position, in that statement of financial position under current assets, other receivables, under that other receivables will take income received in income paid in advance. So it will be shown as income received in advance under other payables, not receivable, because it is received in advance. Other payables under current liabilities, not current assets, because it is the income received in advance. It is the income received in advance. So it will be taken under other payables, under current liability. So this is only for your information I am writing. The correct answer is income paid in advance. D is the answer. So totally 8 questions I have explained, short questions and MCQs in this video. Inshallah, the next 9th problem will start in the next video.